Hey everyone, and welcome to the channel. Today, we're diving into the world of investing giants to decipher a message that's sending ripples through the financial markets. Warren Buffett, the Oracle of Omaha himself, has been making some bold moves recently, and everyone wants to know what it means. Buffett's cash pile just hit a record high of $325 billion. That's right, $325 billion. This unprecedented level of cash held by Berkshire Hathaway, his holding company, represents about 30% of their entire portfolio. To put it into perspective, Berkshire could buy entire companies like PayPal, Adobe, or even McDonald's with that cash. Naturally, this has sparked a flurry of speculation. Is the world's greatest investor preparing for a market downturn? Does he know something we don't? Well, let's examine the evidence. First, consider the current market landscape. Several indicators suggest that U.S. stocks are expensive. The S&P 500 PE ratio, a key valuation metric, is hovering at levels we've only seen briefly in 2021 and more significantly during the dot-com bubble of 1999. The Buffett Indicator, which compares the total value of the U.S. stock market to the country's GDP, is flashing red, signaling a potentially inflated market. This overvaluation isn't limited to just a few sectors. It's pretty much across the board, making it challenging to find reasonably priced investments. Now, Buffett is a value investor. His philosophy is simple: buy great businesses at cheap prices. When the market is expensive, finding those opportunities becomes a lot harder. So, what does a savvy investor do in such a situation? They turn to cash, and that's precisely what Buffett seems to be doing. Let's look at his recent moves. Apple, one of his most successful investments, has seen its valuation climb significantly. Buffett has slashed his stake in Apple by over 2/3 in the past year. He's also been trimming his position in Bank of America, likely driven by concerns about rising unrealized losses in the U.S. banking sector. In fact, Berkshire Hathaway has been a net seller of stocks for 8 consecutive quarters. This is a clear sign of a risk-off approach, with Buffett seemingly more interested in preserving capital than chasing returns in an overpriced market. But is it all about a looming market downturn? While Buffett has never claimed to be able to time the market, he does acknowledge that there are potential catalysts out there that could trigger a correction. These include persistent inflation and potential interest rate hikes, geopolitical tensions particularly involving China, Russia, Ukraine, and the Middle East, fears of a U.S. recession, the U.S. debt ceiling and growing deficit, economic data releases that could spook investors, ongoing global conflicts and their potential impact on the economy. Note that the U.S. election is no longer an upcoming event, as it has already occurred. However, its aftermath and the resulting policies may still have an impact on the market. It's a long list, and it paints a picture of uncertainty and potential volatility. So, what does this mean for us, the everyday investors? Should we be panicking and selling all our stocks? Absolutely not. Panicking is never a good investment strategy. Instead, we can learn from Buffett's approach. Patience is key. Don't feel pressured to chase every market trend or jump on the latest hype. Sometimes the best move is to simply wait for better opportunities. Building a cash buffer gives you flexibility and peace of mind. It allows you to pounce when the market offers those rare moments of deep discounts. Diversification is crucial. Don't put all your eggs in one basket. Spreading your investments across different asset classes helps mitigate risk. Most importantly, stay informed and be prepared. Do your research, keep a watch list of companies you'd like to own, and be ready to act when the time is right. Remember, Buffett isn't trying to time the market. He's simply responding to the current conditions and positioning himself for a range of possible outcomes. And that's a valuable lesson for all of us. So, what do you think? Is Buffett right to be cautious? Are we on the brink of a market downturn? Let me know your thoughts in the comments below, and don't forget to like and subscribe for more videos on investing and personal finance.